That's right. Yeah. Yeah. From a buyer standpoint, it's definitely going to be more difficult to finance. And for some buyers, it might be impossible for them to buy because, for example, if there is a special assessment that's coming, and let's say that the assessment is an additional, $100,000 divided by however many condo owners, you know, spread out over 10 years or 5 years, so that adds another, let's say $300 to your monthly payment. You may not qualify. You may not want to qualify if that were the case, right?
So welcome again to Pierce County Real Estate Advice with Steve McNamer. My special guest today is Jeff Graham with Fairway Mortgage. How you doing, Jeff?
I'm doing great, Steve.
Good. You bet. You and I have done some condo deals, and both of us are really big on front loading, vetting ahead of time, and things are changing in the condo world and how lenders look at it. And I thought it'd be good for you to come on and we can talk about what's happening and what does that mean for buyers. Also, what does that mean for sellers? From a lender's perspective, what's now happening?
Building in Miami, Florida that abruptly collapsed. And I think there were catastrophic loss. What ended up happening as a result of that condo, that was the kind of the tipping for condos and where we are today, was, billions of dollars with a B of losses where insurance companies paid out. Lenders were left holding the bag if borrowers had mortgages on those homes. And that's where, when Fannie and Freddie and HUD and VA look at condos, that's the reason why they're looking at condos with more scrutiny today. And so let's fast forward to where we are today. Prior to August 3rd of this year, there was such a thing as what was called a limited review and a full review. So a limited review with regard to a condo had to do with the financial solvency of the borrower. If the borrower had a really good credit score, and let's say they were putting 20% down, that would, the bank would view that as, well, the borrower is taking or assuming more of the risk compared to a borrower that's maybe only putting 5% down. Look at the condo, somewhat of like rose-colored glasses, if you will.
Yep.
We wouldn't do a full review of the financials of the condo. We would ask a very limited set of questions like, is there a special assessment now? Will there be a special assessment? How many of the condos currently are owner occupied versus non-owner occupied? Those sorts of really basic questions. That was considered a limited review. As of August 3rd, 2026, no more limited review. Even if a borrower is putting 50% down, limited review goes out the window. And the reason being is there's a lot of deferred maintenance on condos nationwide.
Right.
And what happens, or what's been happening recently, is with that deferred maintenance, insurance companies are getting wise. And instead of, we all have if you own a home, you have homeowners insurance. And part of owning a home or home ownership, the joys of home ownership, if you will, is, maintaining the home. You've got to replace the roof every 20, 30 years or so. You've got to, maintain, your water lines and your siding and paint and, downspouts and flashing and electrical components, things like that. These things wear out over time. And what happens is with a condo, the condo owner itself is really, they're responsible for the whole thing because they bought it. But the part of the maintenance of the condo is then transferred to the homeowner association or the condo association itself.
Yep.
And so if the association isn't properly managing the funds that they collect from the homeowners, or if they are not maintaining the property as they should, then the bank, or the insurance companies are really, left holding the bag. And what's happening is the insurance carriers are they're looking at the condos with a little more scrutiny. And as a result, they're not issuing policies. And if a condo isn't insured, it's not financeable.
But I think it's probably just a good note, especially people if they're new looking at condos, because there is affordability. Yeah. You first look at the affordability of condos. is that usually the community handles exterior of the condo.
Yeah.
Yeah, from the interior walls out is kind of condo as a whole responsibility, as opposed to the homeowners all the interior. And I think that's like your balconies, in most cases roofs, paint, the decks, and then of course anything outside your sidewalks and playgrounds or pools or whatever.
Yeah. Yes, one that's really important too. It's often overlooked is siding, especially with the wet climate we have in Western Washington. Then over time, that siding will fail, and as you know, siding is very expensive.
Oh yeah, because you get 3 stories up and your ladders and scaffolding, and that's
A lot of very, very, very labor intensive. Windows are another common, where windows lose their seal or they're not installed properly. And, then you've got, dry rot and just all sorts of problems because of that. And I know every first time home buyer, especially, affordability is a real problem facing our clients today. And obviously, from a property tax standpoint, the property taxes are a lot lower than as you know, as a single family home. The trade-off is that, lack of a better word, you're kind of giving up some of that control, with regard to the maintenance of the home. Of course, you can, as a homeowner or a condo owner, you can paint the walls and, make changes that, whatever on the inside. But as far as the exterior goes, that you're transferring that responsibility to someone else.
Yeah.
Yeah.
Because I know what's interesting is that's one of the big questions then for buyers is it harder than for buyers to buy a condo? And really, yes, for some buildings, because will they handle the scrutiny of a full review?
Yes.
And, and the reserves, I think it was kind of interesting, just some of the comments here that starting now, you got the full review.
Yeah.
Then when it comes to reserves, in other words, making sure there's enough money to handle things that come up, like 15% reserve minimum starting January of 27.
Yeah.
And if they don't have enough money in the coffers, that means special assessments are coming, right?
That's right. Yeah. Yeah. From a buyer standpoint, it's definitely going to be more difficult to finance. And for some buyers, it might be impossible for them to buy because, for example, if there is a special assessment that's coming and, let's say that the assessment is an additional, $100,000 divided by however many condo owners, spread out over 10 years or 5 years, so that adds another, let's say $300 to your monthly payment. You may not qualify. You may not want to qualify if that were the case, right?
Right. Right.
One of the challenges too I foresee is with a full review. Here at Fairway, we close loans. We're very effective. We're very good at it. It's not uncommon. You and I have seen it before where we've had loans close in as little as 7 days. That's not uncommon.
Yeah, that's why we work together.
That's right. Yeah, I'm very grateful.
Here to take care of our clients. So
that's right. But as you mentioned earlier, front loading. What Steve is talking about with front loading is getting the condo documents beforehand. Now, the challenge with a lot of condos is they use like a third party to manage those documents. And you have to go to a portal, you have to pay a fee. It's pretty exorbitant. Usually it's $500 to get those documents. And then you wait, once you pay the fee, then you wait for them to send you the documents. It might take a week. Then, let's say you do that. We're under contract. It takes a week to even get the documents. Then, we have to submit them to our condo desk to review them. Every single time we review them, there are questions. And then we're going back to the HOA saying, hey, there's, we see in your minutes of your last meeting, there was talks of your, replacing the siding. Where are you at with that? Right. And there may not be an answer for that, with replacing the siding for 6 months because the board needs to review it. They have to put it to a vote to the homeowners. And if that's the case, then the lender may deny the condo because of something like that. There's a lot more scrutiny. Instead of being able to close in 7 days, with that example, we won't be able to close until the association has an answer about the siding. Now, what does that mean for a buyer? Well, we move on to another client.
Right.
But most
Yep.
importantly, what does that do for a seller, right? If a seller has a condo that has that sort of issue, they can't sell their condo for 6 months,
Right.
unless somebody's paying cash. If you have a cash buyer that's going to come and say, "Hey, I'll buy your condo,"
Yep.
but if you take out all the offers that could be financed, all the people looking for affordable homes, I mean that really limits your buyer pool, and you might be on the market for a long time before you get a cash offer,
Right.
and it may not be for the price, that of course that you want.
Yeah. Well, because I just got a call from a seller. She wants me to, look at her condo and get it listed, and her dues bumped from 300 to 900
Wow.
here in a short span of time.
Yeah.
So what's interesting too, like with the insurance, is the insurance has to have full replacement cost.
Yes.
And I guess you can do actual cash value for the roof, but then everything else is full replacement cost. If this building has 6 units and it burnt down, how much would it take to build it back up? And is the insurance really adequate enough to do that? Which in the full review, they're going to start asking those questions, right?
That's exactly right. Yeah. Just so everybody's clear, I have a background in insurance. I was an insurance agent for a number of years before I got into lending. The difference between actual cash value and replacement cost are very different. Actual cash value sounds fantastic because there's the word cash in there.
Cash, baby. Yeah. Show me the money.
Yeah, it's not the case. You as a homeowner, you want replacement cost coverage. What that means is, let's say you have a roof that's 20 years old. One could argue that the roof has served its usable life, and if the roof is an actual cash value replacement, a $20,000 replacement to replace the roof, you might only get $500 from the insurance company because the actual cash value of this used up roof is $500. Here you go.
Right.
Versus replacement cost is, we're going to write a check to replace the roof, and that's what you want. Yeah. And you're exactly right. And there are some carve outs where actual cash value is allowed, but it's really important as a homeowner and a buyer, a seller and a buyer, to really understand what that means, because regardless, there's a roof on your house that needs to be replaced.
Right.
How is it getting paid for when the tree falls on it? How is it getting paid for when it starts to leak? If it is indeed an insurance claim, then the insurance company is going to pay for it. But if it's not, you're paying for it. And with your seller, I'm guessing that's part of what's going on there. Her dues went from a few $100s to almost $1,000, and then
I'm thinking you got your regular house payment, and all of a sudden another $1,000 in HOA. Yeah. But if they're also getting ahead of it, that can be a good thing. Then you don't have surprises. We don't like surprises.
Yep.
What's interesting too is as one thing we haven't talked about are the condo communities. When it comes to financing, you have an FHA approved community, a VA approved community, and some that don't have that approval. Do you want to talk a little bit about what that means?
Yes, have an extra layer of scrutiny when it comes to financing. Most condos can be financed using conventional financing. And when I say conventional, what I mean is Fannie Mae or Freddie Mac. They have looser underwriting guidelines in terms of what types of homes can be financed. There are some first-time homebuyer programs, conventional first-time homebuyer programs that allow for a 3% down payment, but they are a little more scrutinized with regard to a credit score. The most people that are looking at condos are first-time homebuyers using FHA financing or possibly VA financing.
Right. Yep.
And there's a website. It's on the HUD website or the VA website. It's public. Anybody can go to it. That will tell you. You type in. There's a drop down for all 50 states. You select Washington State, what county it's in, Pierce County, King County, wherever it's at. Type in the name of the condo and hit search, and it'll pull up. And it'll tell you the status of that particular condo. And if it's approved, the FHA approval process is not that hard. It's definitely possible. And here at Fairway, we can even do something what's called a spot approval. Let's say the building itself is not approved. We have a dedicated team who will go through and get that one unit approved, spot approved with HUD, or you can use FHA financing on it. But from a buyer standpoint and even a seller standpoint, would you want that? Ideally what you want is the whole building approved for FHA financing and the whole building approved for VA financing. And every few years, the association has to reapply. It's not a hard process, but it is a process. And a well-managed HOA will have no issues getting FHA or HUD approval or VA approval. But one that, maybe isn't, fiscally responsible with their budget, or maybe there's some maintenance issues that haven't been dealt with, it's unlikely that they'll be granted that FHA approval.
Yeah.
And from a buyer standpoint, it's an easy, ask, hey, can I use FHA financing? As you know, Steve, there's a lot of agents in our market who will mark in the agent remarks of any particular listing to say it is FHA approved. It really does behoove you to do two things. Number one, ask for those condo documents. A seller should provide those to you. And then also you want to verify that, look up the address in the HUD website and make sure that it is financed using an FHA loan.
Yeah, because what we found is if it's not FHA or VA, usually what that'll mean is there's too many renters in there.
A lot of times, yeah.
Yeah.
There is a common thing. I've known people who have owned condos who have wanted to rent them out. They've moved and they can't. They literally can't rent it out because the occupancy, non-owner occupied rate is too high. A condo that is filled with homeowners or they're occupied by the owners is likely going to be more well maintained because there's no place like home. If you own the home, you're likely going to take much better care of it. And so that's the reason why that little carve out is like that.
And I think what we're going to see moving forward is we're going to see the scrutiny of FHA. Do you have the reserves? Do you have the insurance policies? Could they lose that designation of FHA? Like, to me, there'll be to me, whenever I see where it's not FHA or VA, there's a little red flag. All right, is it condition?
Yeah.
Is it? And sometimes they just don't do the paperwork. But
yeah.
What is it? Again, definitely more questions to ask. Does it have the reserves? Does it have the insurance? Does it have those things? Before you go down, we get down towards the finish line, full review, everybody's excited, and then it can't get done. The condo world moving forward is going to get really interesting, I think.
Yeah, I do too.
But then again, good sellers, good brokers will get everything prepped. They'll have these questions answered ahead of time.
Yep.
And then for buyers, making sure you've got a broker that asks those questions so that you really do know what's happening. Because I think that's, if they don't have the reserves, that means they got to fill the coffers as quick as possible, which means special assessments that are a surprise.
That's a fact. Yeah.
And insurance. And I think the other thing that was interesting is I found a couple, this happened in Florida where it's a cash sale and also the building isn't insurable.
Yep.
So if something happens, you're out. And I thought that was kind of interesting and you could get to the point if you don't follow this, you can't get financing.
Yeah.
It's cash sale only.
I knew somebody here locally who she had bought a condo, 20 years ago. She had worked really hard and paid it off. And it was really poorly managed. Her dues continued to go up. And then there was another, big special assessment. She walked away. She just handed the keys to the HOA and said, I'm all done. And I mean, she didn't want to hassle with selling it. She didn't feel right about letting somebody else deal with these problems.
Right.
I don't know whatever became of it, but I can't imagine, going through the process of buying a piece of real estate, a condo, and then ultimately at the end, and think about these poor people in Florida. I mean, some people actually lost their lives.
Oh yeah. But
terrible. At the end, if it's not managed properly, then, and I don't recall the name of the condo. I know it was in Miami, Florida. And I also know that it was 100% preventable. I mean, obviously there were some issues, building on soft land and things like that. But what I had read about it was there was some deteriorating concrete in the foundation,
Yeah.
which exacerbated the problem, and that's why it happened. I can't even imagine just losing my house like that.
Oh,
and
that
then
dude,
having,
yeah.
having no recourse
You pull up,
you know.
you pull up your, which you used to have a garage or carport, and it's like, oh, okay.
Yeah.
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 And that was just, I know that a lot of other regulations had come through where condos had to start doing some inspections across the board. And as now it's interesting, they're even digging deeper because they're realizing, hey, these need to be managed properly and money needs to be able to be there so that it can be a viable community for everyone. And it can stay affordable, because that's the thing, like maintenance is always cheaper than full rehab remodeling. Can you keep that maintenance up? I think,
Yes. Yeah, exactly.
really huge. No, that's good.
Well,
There's definitely some good questions for us. If we're working with buyers, also working with sellers. I know this new stuff coming down the pike is going to help me when I'm working with sellers, getting front loads. So it's a good, easy transaction from buyers. Make sure they're getting a good deal. Because again, condos can, for the right person, it's really a great situation. It's a great setup, but we want to make sure it stays that way.
well, it reminds me of our client that bought the condo, the penthouse condo, well managed. I mean, I've spoken to her. It's been many years since she's moved in, and she loves it. The place is managed perfectly, and her HOA has gone up, but the place is managed. It's meticulous. It's a beautiful place, and that's what you want as a condo owner. That's exactly what you want from your HOA.
No, for sure. We'll definitely see. We'll be real curious how condo world looks and pricing and as we move forward here. Hey, thank you for taking the time, Jeff, from a lender's perspective of what we need to look at for condos and lending as we're working with our dear buyers, and what our sellers can expect, when they're putting their condo out on the market. You got to really appreciate you taking the time.
Steve, have a great rest of the day.
Right, you too. All right. Thanks again. Bye.
Bye-bye.